Let's welcome, as always, Monday morning, Omar Najia, Global Head of Derivatives at BB Energy. Omar, markets opening with a little bit of a bounce this morning in Asia, with Brent popping up slightly above $91 a barrel, $92 a barrel, excuse me. A bit more life than I thought. But nonetheless, it does look like, at least for this morning, that that $90 floor that seemed to be the intention of OPEC Plus when they took their moves in the last few weeks is holding. Your thoughts on the outlook for the markets this Monday morning?
So I think basically same. I think equities are going to, keep cratering. Economy is going to get worse. More panic, more kind of political chaos and all that kind of stuff. That's one side. Pound and euro lower. Immaterial if they bounce a little bit, but directionally lower and a lot lower. And oil, I think, has this, final bounce. Oil is very tricky right now. I wouldn't be selling it. And I think basically it has one final bounce, and then it will be a sale. Whether WTI gets to 100, 105, some kind of level like that. But with this market, you need it to get into no-brainer kind of territory. Right now, it's not. Right now, it's a kind of thinking game, and it's not a no-brainer thing. If it gets to 105, it's a sale, and if it gets to I don't know, 70 something, then it's a buy. But I wouldn't do very much right here, right now, until we see what winter's going to look like. But I think it's going to be extremely cold and extremely ugly.
Well, let's go to China, where the big news of the day this week is the Communist Party Congress. Albert Stromquist, principal at Landstrom Advisors. Can we now look to China in all of this chaos in the world, to China to give some sort of firm, clear direction as this Congress sort of moves through and moves behind us?
I don't think so. I think the Congress is going to be pretty much plain vanilla. There'll be some new faces that crop up in the Standing Committee and the Politburo, but I think those have already been foretold, so there shouldn't be any surprises on that side. The opening ceremony, as you would expect, and the opening speeches were so much hubris, a victory lap to celebrate the success of the last 5 years, which was pretty thin. In fact, it reminded me of a quote from the Kurt Vonnegut novel, Slaughterhouse-Five. Everything was beautiful and nothing hurt. Quite the contrary. It's the past 3 years have been fairly painful for some of the main economic engines here in China, and especially for the people. There was only weakened acknowledgement of that in the opening speeches. So I expect that there's going to be some some smoke-filled rooms and a lot of dickering going on this week, but I don't expect any major changes from what we're expecting, what we've been led to expect.
Bora Barryman, managing partner at Hormuz Straits Partnership. It's a great title for a company sitting in London. There are Hormuz Straits in and around the UK these days, it would seem, with greater fractures than we have over here. There's so much to talk about within the UK, Bora, this weekend, this last week. Let's start with the question around the central bank of the UK. They really seemed to flex their muscles last week in a way that was quite defining on the outcome of events last week. Your thoughts on that specific aspect of what it tells you about going forward?
The UK central bank is in the same quandary as the US Fed. Both of them had this sort of transitory inflation narrative that had massively corroded the credibility of these institutions. And right now, they seem intent on maintaining a hawkish tone, even at the cost of pushing the economy into recession. After all, the last time we saw these type of double-digit inflation numbers were in the early 80s. And the Western world experienced, both the UK and the United States experienced a very painful recession as interest rates were taken well ahead of the rate of inflation. So that's this message that I'm hearing from the central bank is they don't want to give the politicians easy outs as they had been getting for the past decade. So it's a bit of a change of tone.
Well, you'd have to say, Bora, that it's the first time I can recollect that you could nearly draw a dotted line from the central bank governor triggering the firing of a chancellor. I mean, it was that direct in its somewhat of the straitjacket that he imposed on the government.
Look, following UK politics, I'm sitting here, right? It is treacherous waters, and clearly, I don't think the Tories chose the candidate with the most credibility with the bankers, and they went in another direction, and now Jeremy Hunt seems to be reading from the IMF hymn book. I just looked at the cover of the FT, and he's promising to raise revenue and be actually spending as well.
Fiscally prudent. I mean, exactly. It does strike me that the reason I'm sort of drilling into the point is that it does seem to smell a little bit like as the monetary policy makers are growing in their muscular nature. We saw with the Fed in the US sticking by their guns. Omar, your thoughts on the outlook for that? I know in the past you've been somewhat skeptical that the monetary policy makers would have the bottle to move forward with the full scale of rate rises needed to get inflation under control.
Well, clearly they haven't, and clearly they won't, right? So if you have inflation at 10, 20%, having interest rates at 2 or 3% is just a joke, right? So it's showing you that they don't know what to do. I mean, the UK is a major economy and a major player geopolitically, and their answer to the problems that they have is more of the same. And if you look at the US, their answer to the problems that they have is more of the same. And if you look at Italy, their answer to the problems that they have, which is basically massive debt, low growth, all the rest of it, is more of the same. In other words, more debt to try and kind of, stimulate growth. The problem is that with this inflation and with these interest rates kinds of, moving higher, all that collapses. So I was reading this morning that the UK was paying like 85 billion a year on their debt. And after interest rates went up, or a combination of rates and the pound moving lower, they're now paying another 20 billion. So instead of 85, it's 105 or plus or minus. So you can see that it's clearly unsustainable. The biggest debt is owed by the US. They also have the reserve currency, which means that they can print, to oblivion. But that's why in 1950, a burger cost 10 cents or whatever it costs, and now it costs like $5. So the West has a problem. And basically, when the US says, OPEC is bad and, we need whatever, it's that kind of thing is basically, I think, going to be finished because it's the other way around. It's basically OPEC that should be saying that, oil is way too cheap. And the fact that, the US or Europe or the UK can't afford it is their problem. That's the price. You want it, pay for it. You don't want it, move along.
Move along. Albert, coming back to the China Communist Party Congress opening day yesterday, 2-hour speech by the President Xi. It was fairly robust in its muscular nature. Is that to be expected, or did you hear anything there that one might want to pay attention to of, how a third term of Xi might use those muscles?
Well, I think he wanted to set the tone for the next 5 years, and the tone had to be muscular. How he might use that, constructively, domestically, is the challenge that we're currently facing. Sorry to kind of run from the question, but
Yeah.
there is serious economic weakness in China today that risks sending China into a deep recession and carrying the world with it if it's not addressed properly. And while there was an acknowledgement yesterday, there were some problems that the government needed to address. There were no solutions. And there were very little discussion around the granular discussion around the problems themselves. So the speech invokes Taiwan and expansion of the military capabilities and renewal of his pledge to put China front and center on the world stage. So all of that bellicose talk is really the tone that he wanted to establish, but it didn't accomplish anything tangible as far as how he might address the problems today.
Is there, when you think of the possible dominoes that pushes China into, recession with the rest of the world, what would be the biggest domino? What's the trigger to keep an eye on? I mean, everybody seems to be focused on COVID, the zero COVID policy, but is it more than that?
Well, the zero COVID policy is so anomalous that it's kind of taken over the conversation. People are tired. They're exhausted with zero COVID policy. They just want a vaccination and leave, but that's not going to happen. So the tension here is, and among the population, is palpable, right? Is there the other solutions that are mooted? Obviously, China puts massive amounts of new capital into infrastructure, right? But that's all underperforming capital, and that's not sustainable. It's what's carried them forward over the last 10 years, but now their reserves are low. So how are they going to put more money into what infrastructure remains to be seen? Putting money into the pockets of the Chinese consumer means shifting wealth from the government to the people, and that has political consequences. So that's a nice idea because that replaces consumer spending in China with an export-driven economy. But there's no easy fix for that that's going to mollify everyone. So frankly, John, I don't see an easy answer to your question.
Bora, we had some sort of fighting words from the prince himself, Jamie Dimon, at the end of last week that the U.S. should be spending a lot more money on oil and new oil and gas production capacity, and obviously Omar and others have critiqued that lack of capex expenditure. But my question to you is, are the banks ready to fund it? Because it looks to me like the oil companies are not interested in investing the money. They've lots of it. It's not like they're short of capital. They got the politicians screaming, please build more capacity. Where do you think the banks sit at this time in terms of, I mean, Jamie Dimon's screaming, more oil, more gas. Is Wall Street or the investment banks or others willing to fund that?
Yeah, I think Jamie Dimon is out on a limb, and he and I'm on the same limb with him. I'm screaming that way, but I think he's a figure that might even be out of line with J.P. Morgan's own ESG committees, right? I'm sure there's a whole bureaucracy there that's overseeing where the investment goes, but the capital markets are a lot more than the bank. So look at the silver lining is there is private wealth out there. There's scope for issuances by oil companies, and clearly, I think this is how both majors and independents are tapping the markets through the private markets, and there is liquidity there, especially for, I would say, the near investment grade and above slice of the market. And that's an exercise we get to working with rating agencies and the like to determine, the capacity of any type of issuance to support a bond. The thing there is banks can be really chummy and help you through the cycle, and you have to be a little bit more disciplined to service a bond issuance.
Omar, it is somewhat the surprise of this year. I mean, if there is a few surprises as you go to the end of the year and you pick your top 10 list of surprises, the fact that the US oil production has not returned to pre-COVID levels does seem to be one of them in terms of the oil markets near the top of surprises, at least on my list. 1 million or more barrels below the pre-COVID peak. Your thoughts on that and the outlook, why we're at that place? Is it likely to change?
And, this stuff with shale, I've been arguing for a while. Shale doesn't make money. Shale basically returns some money. If you invest you invest $1 billion, you make 100 million, and you're like, wow. And that works only if interest rates are zero or negative. So if interest rates go up, you can forget about it. It's ridiculous. The problem with the markets, the problem with oil, and the problem with investment is nothing to do with capital in banks. It's politicians. The law says carbon zero. The law says no more selling cars. The law says blah, 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 blah. Nobody's going to invest because nobody's stupid, right? And it's the same stuff that goes along with oil and the great American, I don't know what, and all this kind of stuff. Energy, it's really simple. You need some stuff to survive and stay alive, and other stuff is just like cherry on the cake, right? So you need to eat, and you need energy, and the other stuff, iPhone and Hermes bags and all that kind of stuff, not so much. So what do we have in the West? We've got lots of iPhones and perfumes and all that kind of stuff. Nobody's making any food anymore because, or not the kind of planting. Certainly not in Europe. In the US, yes, but a lot less than they used to do. And so it's this disaster, and everybody's like surprised. Oh, I don't know what's happened. I don't know. I mean, what do you mean we've been living beyond our means? What do you mean we're not? We're basically colonial. I don't know what. Blah blah blah. What do you mean ESG is not important? This whole idea about why don't we have renewables when we have a crisis like now? So if you ever need something, you need it when there's a crisis. So there's a crisis in energy. Where renewables exactly? Nowhere. They're never going to be anywhere. If they're not here now, they're never going to be here. It's ridiculous. And people still don't know. No, you've got to invest in solar. It's the future. No, the future is going to be coal and wood.
Well, we saw over the weekend the Green Party in Germany succumbing to the system, because they are in part of the coalition government, that they would facilitate the continuation of the nuclear power plants in Germany staying open. Albert, I wanted to talk to you a little bit about the strong dollar, because I want of that list of things that are challenging China going forward and Asia as a whole, is the fairly robust dollar holding near whatever, against the yen, multiple decade highs. But your thoughts on its impact? We've reports over the weekend that it's starting to put a lot of stress on Indonesia, which of course, one of the biggest population countries in Asia after China.
Well, it was at this point only 2 years ago, in 2002. It was trading at 7.2. So we forget that in recent times it's also been strong because it really collapsed after that. But it's giving China a headache because their raw materials costs are going up dramatically, and their energy costs are going up dramatically, and their exports are down. Right? Their export capacity is limited by their zero tolerance and COVID controls. And softening of economies in the West, and reduction in demand for the kinds of plastic products that China produces so well. So it's one of those core issues that needs to be balanced.
The
in next
G7
12
had
months.
the G7 meetings last week seemed to fail to find any kind of cohesion of strategy around the strong dollar. Everybody's to themselves, basically.
And it's true. So Indonesia is suffering as well, as you've noted, and facing the same headwinds as China. So
but with less ability to deal with it, I suppose.
Well, the central bank of China is going in the opposite direction, isn't it? They're reducing interest rates to stimulate debt, borrowing, to invigorate the property sector and a few other industries. And that's not having the intended results either. So there's going to be a strong dollar, at least here in China, going forward. That dynamic is not going to change.
Let's go to the survey question, which we picked up on yesterday. I just wanted to give it a Monday morning outing again, given that we're in President Xi's re-election Congress. President Xi Jinping re-election will be bullish or bearish for oil markets? Bullish because it will lift COVID restrictions and off we will go with more demand, or bearish because COVID will continue. And so that sort of continued downward pressure on the oil price. And 3 option, no different. Welcome the view of the room on that. Bora, looking forward, again, coming back, as we're still sort of on the domino effects of the OPEC Plus decision to cut quotas by 2 million barrels a day, physical barrels by who knows, 600,000-800,000. It depends. We'll see from November 1st. Your thoughts on that? Firstly, on that decision, putting a floor of $90 on Brent.
Well, it's a rational decision. It's a rational decision. These are oil producers at the end of the day, and they see that the Fed is raising rates, engineering a slowdown of the economy to slow down demand of these vital commodities that are under broad and persistent inflationary pressure. That's the way the Fed characterizes it. So they're looking at the Fed, and the party line from OPEC Plus is this was an economic decision. Clearly, it's not politically helpful to the Biden administration. So they are the loudest in sort of protesting at this. Clearly, it's kind of, they need to be protesting during this election season. I'm sure there are grumbles, in other important countries, in other important oil consumers, but they're not going to get undiplomatic about it. The way the U.S.-Saudi dialogue is in threat of spiraling a bit out of control. So, in my worldview, the policy of the Fed is everything. This hawkish rate policy is one of the symptoms of the end of globalization as we knew it. Europe, Asia, Africa can all complain that strong dollars are actually transferring inflation, the burden of inflation onto them, and the pressure away from the US onto the rest of the world. And the answer to that is that the Fed is responsible for inflation and employment in the US, not the rest of the world. And likewise, OPEC is responsible for maintaining the revenues of these countries. And I think, as Omar has noted, they get the message that it's going to be net zero in 10 years and they'll be out of business selling oil to the West in a decade. So they need to maximize their revenues now and invest for the future. And this is unfortunately a bit of a zero-sum game. Not optimal,
in some ways, in some ways they're both competing against. One is the price cap and creep the price down, and the other is price elevation. Omar, Monday morning, going back to where you started, in the sense that you could go up to 105 or go down to 70. I'm wondering, as we see this downward draft right through last week after the OPEC Plus meeting, a little bounce this morning, but you think where's your call? Do you think you're more likely to see 71st than 105? I mean, that climb back up to 100 without some major geopolitical headline seems to be a little difficult at the moment.
No, I think we see 105 is more likely, more probable. I think we see 105 on WTI before we see we see like $70. Oil is, I mean, you only want to commit when things are no-brainers. I think basically the market, where it gets to is difficult to tell. Could it get to 95 and not 105? Yes. Could it get to 100 and whatever 100? Yes. But I wouldn't buy it until so the idea is it's going to go up now, get to that kind of level, call it 100, 105, and then slip. The question is, when it slips, is it going to be basically back to, let's say, 80 and then off to the races to the upside, or is it going to be down to 60 and then off to the races? If it's 80, it's only going to last like Q1. You'll see some weakness basically in Q1 and that's it. If it's going to be $60, then it's going to carry on until, Q3 2023. So I think higher for now is more probable. And then either we come off a little or we come off a lot, depending. If you look at the economy, you have to say that, it comes off a lot. But having said that, you've never had an OPEC plus that finally gets that, its job is to take care of itself and its people rather than do what the West wants it to do, because the Western consumer is quote unquote suffering. So it's very interesting. My gut reaction, look, I always like to be bullish, and my gut reaction is, we 105, we come off to 80 and then off to the moon, basically. I'd love to see that. I'd love to see oil moving in a different direction to equities. But then the other thing I think about is fear. Fear. When equities collapse and when equities, start to, come off and the West changes forever, that fear is very difficult to resist in markets, and it could be very difficult to resist in oil as well. So those are a few kind of things that we're thinking about. I really don't know. I keep looking and toing and froing between the two, which is why I say there is no no-brainer view right now, only on equities and only on currencies.
The no-brainer view, Albert, to you to close us out with the survey results. The no difference seems to be the majority of the view here. The no-brainer to me, Albert, on this question is buy a bunch of Pfizer vaccines. Why is China not purchasing the proven vaccines that has the rest of the world out at the beach having the crack, and China is not?
A very prominent Chinese multi-industrial company in Shanghai entered into an MOU in early 2020 with Pfizer to manufacture the Pfizer vaccine in China, and they bought an option on 100 million initial doses to kick the program off, and they were instantly shut down by the government, right? Whose primary interest was vaccine nationalism, refusing to acknowledge superior medical research in the West, and instead depending on their own prowess to come up with a series of effective vaccines, which they didn't. So today, there are no vaccines in China. Nobody's being vaccinated. Nobody's being pushed to get vaccinated. The vaccination rate is very low, and the vaccinations that have been distributed to the population are no longer effective against the current strains of the Omicron strains of the COVID virus. So that leaves you with quarantines and zero tolerance, and in a program that's going to be testing people every 3 days for forever. Right?
Wow. That's not a very positive outlook. If nobody is taking vaccines and the vaccines that have been taken are no good, and you have an aging population, you would have to think that alone will put China economic outlook for 2023 on a fairly flat at best.
They are working on their own messenger RNA vaccines here in China.
Okay.
They're not approved yet
Okay.
for trial testing, certainly not for rollout to the population. So it's going to be a matter of time, maybe another year or two, before something comes along to begin to solve the problem here and reopen China.
To be politically acceptable as well as medically purposeful.
Correct. Yes.
That'll be interesting. Well, it is Monday morning. It is 11 o'clock in the UAE. Our half an hour together is up. We have oil prices trading a little bit higher, correcting the downward trend of last week, which we'll see. Will that continue, or will this be an up week? Will we be back in this space we spent a lot of time in earlier in the third quarter, the doldrums of the 90s, up and down, 90 low 90s, high 90s, and there it's stuck for a while. Let's see. But Omar Najee, as always, thank you so very much for your thoughts. Bora Barryman, thank you very much. And Albert Stromquist, always great to get your insights from China. Really, really unique and helpful. Thank you. Have a great day, everybody.
Thank you.
Cheers.
Thank you, Bora.
Bye-bye.
Thank you, Omar. Bye-bye.